Thank you very much for that very warm welcome. I'm very happy to be here and so happy that when I invited myself, Carrie said, yes, I could come. And this is my first trip down under, and so far it's been amazing. And I know this is a mining conference, so today's presentation is really based on that. Of course, everybody knows what's happening with the stock market and gold mining stock, but basically what they're missing, again, this is a currency life cycle issue. We are at the very end of this currency with purchasing power values in all fiat money, government-based money, essentially at zero. The only thing holding all of this together is public confidence in the currencies, which they knew when they created this system. People cannot help but marry the legal money of the state and hope that at some point it regains some of its former value. But the reality is that it never does. And so we need the miners because we all know with gold, there is a finite amount. With this stuff, they can make as much of it as they want. So I wanted to talk to the miners really and address this because diversification is absolutely key. And history does indeed have a tendency to repeat itself. And so that's what we're seeing. And if you learn how to recognize the patterns, then you can guess, you can have a really well-educated guess on where we are in this life cycle. And so simply put, then as in now, the world economy was highly integrated. You know, back in 1913, 1914, and again in the 70s, of course, highly integrated. The globalized world is afflicted with various forms of political fragmentation, and we had a great speech this morning so that it's easy to see that. Let's see, sustainable pools of private capital, okay? Is it really the governments and the central banks that run everything? Or is it actually the corporations with enough clout like Apple, you know, and the money that they generate, who really has the clout in here? It's not really the governments and the central banks, though their job is to justify their existence. It's not about taking care of the public. It's about making sure that they still have a job at the end of this. Personally, I would like to see them lose that job because all they've done is impoverish the world and transferred wealth from the many to the few. But again, if you don't hold it, you don't own it. I mean, frankly, it really is as simple as that. So when we're looking at the stock markets and the bond markets, these are all intangible assets. Frankly, it was really handy for me in the beginning of my career to have my Uncle Al. And some of you know this story, but for those that don't, I'll tell you because it was very influential. You know, we talked about bullion, which is newly mined and minted gold. And I personally, because I'm American and because we have had a confiscation in our country, and actually we've had more than one, although you too have had confiscation of gold here. One day I was like 10 years old and he was my favorite uncle. And my parents and I were at his house and he said, come here, I want to show you something. Now this would have been 1965. And we went in a back bedroom and he had two tall floor safes. And he opened the doors and he said, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes. Now I was 10, I turned around and looked, and I'm telling you, you could not fit one more 1 ounce gold coin in those safes because he was a major antique dealer. So he'd go into wealthier homes and people would go, oh, I have this gold, you know, I don't know what to do with it. So he would buy it. Now, the point of that is, I didn't know then because I was 10, but he had probably at least 3 monster boxes in each one of those safes minimum. So he was holding roughly 3,000 ounces of gold when it was illegal to hold more than 5, except the way that he was holding them, because they were all pre-1933 coins. So did I realize the impact then? No, but one day I was writing, and I said, if you were alive like I was in 1971, and I realized all these memories started flooding back in. So when I say I was groomed for this moment in time, I absolutely was. And you know, you get old enough, you can look back on your path and see why you are where you are today based on history. And the same thing with currency life cycles. So when I'm talking to miners, they've been sorely abused because it's really easy to sell short. I mean, and the derivatives, all of this Wall Street garbage, which really is about wealth transfer and wealth manipulation. Now, of course, Australia is definitely a commodity country, and they have a very rich history in gold, as you well know, because this is where you live. But they also have a history of confiscation. And so my personal belief is I cannot tell you for sure that they're going to do an overt confiscation, but I can tell you for sure they have been confiscating your work, your wealth, since the day you were born, because inflation is an integral part of the government currency. And the reason why they did it was really, I mean, there were a number of reasons, but two key reasons. For governments, they like to tax and spend. But if you're on a gold standard, that's obvious, and that's a problem. So inflation is an almost invisible tax, and in the 70s, inflation was a very dirty word. Now, what have we been told? No, inflation is good, because it makes things look like they're going up, and it hides the true trend, which is the purchasing power, which is going down. And we're going to talk more about that. So I think that it makes a lot of sense to look at history, learn from it, and diversify your portfolio if you're a miner or you're not, so that no matter what happens, what if I'm right, what if I'm wrong? If I can do something where it really doesn't matter if I'm right or wrong, that's always the direction that I'm going to go in. And if it costs me a little bit of premium, I consider that an insurance cost. And the other piece is understanding the true value of any asset or instrument, the fundamental value, because that is the only way that you're going to know if something is undervalued, fairly valued, or overvalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? And it's easy to manipulate intangible assets to reflect that. Now, inflationary cost pressures and geopolitics. So for miners, the top two, and this has changed from 22 to 23, inflationary pressures, geopolitics are the top two issues. And you guys know that better than I do being here. But for miners, a geopolitical risk is a risk that something changes outside the country in question or in the relationship between countries, which makes investing in a given country less certain and less attractive. And we've certainly seen with the tariffs and the Cold Wars and a lot of things that are going on that these alliances are shifting. And how are you positioned to protect yourself? And then on top of that, you have just your traditional political risks. And that includes, and I'm going to talk about this a lot more, outright nationalization, capital controls, governments preventing the repatriation of capital, so bringing that capital home. And these are significant. So therefore, you need to be diversified, even as a miner. Are you selling everything that you produce, or do you have some physical that's held back? I can't answer that one, but do you think that there might be a black swan event, an event that nobody foresees occurring? And do you think that the crisis that erupted in the US and the regional banks that they wanted everybody to think was over and under control? No. Are we going to see something in September? Because we saw something very similar to this back in 2008 when the system actually, in my opinion, died and was then just put on life support to get ready for the new system, which we're going to talk more about. But look at this. Resource nationalism likely to increase in 2023. 68% of the respondents were looking at that, right? I mean, this is a very big deal because that is a form of confiscation. They just don't want to say confiscation. So don't call it that. Let's call it something else. But a rose by any other name is frankly just the same. And there are all different ways that a government can nationalize a corporation. Let's take a look at some of those. Increased taxation anticipated to be the most likely thing to do. And that includes, somebody brought up last night, well, they tax this and they tax, yeah, because they want to nudge you to go in a direction. So if you look at the taxable event, if you buy and you sell gold and you make a profit, yeah, there's really no way, well, I can't say that. We are in, are you going to, oh, that's right, this is going to be distributed. So maybe I should not say what I was about to say. But, the gold, when you hold it, you own it. It's invisible. That's why that's one of the reasons governments and central bankers don't like you to hold physical gold, because essentially it's invisible to them. And it can protect you from all of these geopolitical risks. And actually, I'll be honest with you, there are times when I pay for things with gold or with silver, because I'll offer it. Okay, how do you want to be paid? I can do gold, I could do silver, I can do cash, I could do check, I can do a wire transfer. What do you want? Savvy people will say, give me the gold. That makes a whole lot of sense. But outright expropriation, well, that's pretty obvious, isn't it? Forced equity transfers, restrictions on exports. I mean, there's all different ways, all different names to say exactly the same thing. They are going to tax you, they are going to take your wealth away from you, they are going to transfer it. Let's take a little look at political risk. And gold for oil. Okay, well, gosh, where are we? Oh, we're in Ghana. And that's not that long ago. And I'm sure a lot of you remember this, that they are directing miners, requiring them to sell in the local currency at least, this is a minimum of 20% of what they pull out of the ground and they refine. Why would this be okay? But it's political. There are more of us than there are of them. Why can't we come together in community and at some point, in the very near future, just say no? This is not inevitable. This wealth transfer is not inevitable. But if you allow it, then what are you going to do about it, right? Then we just get what we've requested. So understand that we all vote with our wallets, we vote with our purses. And when you position into physical metal, that's personally my vote. We've got a lot going on in the geopolitical front with trade tensions. But look, inflationary cost pressures on end users, 38%, and this is the one that I really like, speculative pressure on commodity prices. These are traders. These aren't the people that are working and pulling the gold out of the mine. Everything has been turned into a financial product that really started in the early 80s, and frankly, it's complete. So it doesn't matter what asset or what you're looking at, water, houses, gold, everything has been turned into purely a speculation. And it should be very clear to everybody that the most important entities are the corporations, not the individuals. And it's all about trading. Global, okay, you guys know about all-in costs for mining, and they have been growing. Does that put a floor underneath the price of gold that you see on the spot market, which is simply a contract? So easy to create as much gold that does not nor ever will exist, and thus manipulate the price action that everybody sees. And why was the spot market created? To keep people away, to keep the individuals away from buying gold and protecting their purchasing power. These are derivatives. On the top, this is global, and derivatives are just a big leveraged bet. It's an easy way to manipulate these markets. On the bottom, there's Australia. Look at how much the derivatives have grown, particularly after 2000 and 2007 to current levels. And they're only getting bigger and bigger. So we really don't know what the true leverage is in this system. But do you think you can believe what Wall Street is telling the world? That would be a big fat no. You can't believe anything. And everybody admits it. So while the notional value, that's just the contract price that Wall Street agrees upon, but none of it reflects the true value that is at risk inside of this system. My personal belief is that it will be a derivative event that will overwhelm the system and crash. And the other part is that most people think that the governments and the central banks just want the system to keep going like it is, and so they're just trying to postpone. They're only trying to postpone until they have the next piece in place. What they know is they need a huge crisis to get the public's buy-in to the next system that they want to put in place. So I don't really think that, I do think that we're going to see a planned catastrophe, a planned black swan event that will justify it. And in the US, the Federal Reserve came out with the Fed Now, so whether people there know it or not, every single person has an account at the Federal Reserve. And during the pandemic, what did they say? How much easier it would be to stimulate the economy if they could just put this cash instantly into everybody's account. So let's have a catastrophe, let's freak people out, but tell them don't worry, because look at all this free money that we're giving you. There is no such thing as a free lunch. And so the public generally is naive about this, but these guys are not naive. We don't know the real risk that we're facing. So we just live our lives without thinking about it until it becomes visible. And people say this all the time. Well, when? Because what, you think you're going to get ready 2 seconds before it happens? There is no time. I have become a prepper. I'm not a gardener by nature. I'm not a farmer by nature. But I am now an urban farmer. I'm absolutely a farmer. I probably produce about 85, we're working on 100%, but about 85 to 90% of the food that I eat. And we've got a wonderful community that we're developing. That's actually why I'm here today, because this must be a global community, not just a local community. We have to come together to stop the nonsense, because otherwise that nonsense will stop us. And if you don't position into something and become as self-sufficient and independent inside of community, then you're going to have to do whatever the government wants you to do. It really is that simple. Because what they want is complete control. So we have the surveillance economy. And this is happening all over the world. They don't want you to realize it, and they've told you in reports. I read the IMF stuff all the time. My daddy always used to say to me, do what I say and not what I do. Now, it makes him sound less than. He was really referring to driving mostly. But I'd say to him, Daddy, that doesn't make sense to me. So I read what they say, I watch what they do, and then I know, are they lying or are they telling me the truth? And with global central banks buying more gold than they ever have in history, but they don't want you to buy it, what is that telling you? They want to retain their freedom, they want to retain their control, and I think that's what all of us here want to do as well. And all of this is happening really, you know, everybody always says, you know, oh, well, we've waited in the recession and it hasn't come, and what are we hearing? Soft landing, no recession, this time is different. That's what they always say. This time is different, but frankly, it's never different. And we're looking at coordinated efforts on a global basis. So it isn't Australia as one country and the US as another. I mean, all of the members of the IMF are either central bank chiefs or they're treasury secretaries. None of them are elected, and hey, guess what? With blockchain, why do we even need them? Couldn't the individuals vote for what they wanted? You haven't heard anybody discuss that, right? But they will use these to absolutely control us. And if you are committed to the system, if your vote is keeping everything in intangible assets, you will lose all of your choices. 14 pilot programs. And this is the purchasing power of the Australian dollar. And frankly, it looks just the same as the US dollar, the Japanese yen, or anywhere else. So the problem is that the central banks are out of ammunition. As long as there was a level of purchasing power that they could attach and take away through inflation, okay, they could keep things going and people didn't realize it. But what do you have? Look at the spot gold in the Australian dollar. It's near all-time highs. But is that reflecting the true fundamental value of an ounce of gold? Or is that simply reflecting the enormous pressure, like a pot with a lid on it, and what's going to happen to the real gold price? Personally, I'm not counting on Wall Street reflecting that true value. And how do you get that number anyway? Because, we're not taught how to do this. But it's actually pretty simple. And I'll never get you to the penny, but I'm going to get you relatively close. Because again, how do you know whether or not you want to buy something, hold something, or liquidate something? You have to know its true value, because these trading markets can mask everything and anything that they want to. So this is how I do it, and it's really very simple. Gold is good money, and then the fiat money is debt money, right? So you want to know how much a real ounce of gold is for its most important function, which is to hold your purchasing power even? You just take all the debt that there is in the world and you divide it by all the gold. There's an unlimited amount of debt, and that's the only tool that they really have, is more and more debt. Well, there's a problem right now because I know in the US, those new treasury auctions haven't been going very well. And even though people think this is kind of new, it's not. It was already back, I think it was December 18th, but don't hold me to that date because I could be wrong. But it was in 2000 was when the Federal Reserve first started buying treasury bonds. That's what third world countries do because they have to monetize all of the debt. But did anybody talk about it back then? Heck no. They didn't talk about it. It was secret. But all of a sudden, in 2008, 2009, wow, that is a good thing. It's not a good thing. Debt is not a good thing. They want you to think that nothing matters, the interest rates, the interest on the debt. In 2009, I did a little study, and I'm not an accountant, so I sent my work to a friend of mine that is an accountant. He said, yep, that looks reasonable. It's going to be really simple. But I thought to myself, at that point, we were running $1 trillion deficit. But yet, we were servicing about $13 trillion in debt. So I thought, well, why are we servicing $13 trillion in debt if we really haven't been running deficits, that deeply? And you can go into the FRED, the Federal Reserve Education Department, and you can look at all of that underlying data. And what I saw when I did that was that we weren't paying all of the interest on that debt, so the excess interest was going into the principal, and the debt that interest had been compounding. Now we're at 32, 33 trillion, and I don't even know if that's accurate or if that's something that's hidden. But what I can tell you is that there are always opportunities in crisis, right? Never let a good crisis go to waste. And so if you are in the right place at the right time with the right asset and you have a truly diversified portfolio, okay, have some intangibles. I mean, people watch the markets and they think that that's a good indication of stuff. Me, I think it's just a trading market, and I'm an ex-stockbroker, so I can read the language. And I'm not a speculator. I am a long-term investor. and I'm investing for my children, my grandchildren, everybody's future. So I like to hold it, I like to own it, and as we move through the rest of this cycle, when those opportunities present, I have an opportunity like everybody else here, everybody else in the world really. If you hold your purchasing power, you're going to have the ability to take advantage of the opportunities that will present. Because right now, thanks to Wall Street speculation, every other asset is at nosebleed level valuations. But that won't last. So you have gold down here, severely undervalued. According to my calculations, at a minimum, it should be about $15,000 an ounce, and it's at $1,900 and wherever it is today. It is a bargain, right? You guys all know that. I mean, you're pulling it out of the ground, those that are miners in here, and it's a bargain. So I personally like to have most of my wealth in an undervalued asset that is in a long-term positive trend. For me, it's important to leave a legacy because I know that what they have in mind are no choices. They don't want you to have any choice at all. We're in CBDCs, they can control everything unless you have some real money outside of the system and you are independent. This is critically important. And so you want to have a properly diversified portfolio so that you can take advantage of this when opportunity presents. That's my personal strategy. It's just based on history and a repeat of history. It's not rocket science. It's actually pretty easy. And you all know, gold is pretty simple, right? It's real money. The cryptocurrencies, do I think that they're here to stay? Of course I do think that they're here to stay. But they're also easy to control. And the way that governments get you to participate is by making it look at all the money that people made in cryptos, right? I just never thought it was a coincidence that Bitcoin came out in January of 2009 and quantitative easing started in March of 2009. And then look at what happened to Bitcoin. Got lots and lots and lots of eyes. Are there a lot of eyes on gold? No. But your eyes are on gold. My eyes are on gold. And this is going to give everybody that's holding it, when these opportunities present, you can build out your wealth base, you can expand it, and you can actually be better off on the other side of this mess than we are going into it. But again, I cannot really stress this enough. We have to come together in community. There are more of us than there are of them, and we have to say no. We vote with our wallets, we vote with our purses. My vote is for food, water, energy, security, barterability, wealth preservation, so silver and gold in my possession, community, and shelter. That's what we have to do.